Welcome to The Explainer. Today, we're unpacking the actual mathematical mechanics of wealth creation. We're looking closely at a massive structural divide that fundamentally separates those who simply earn an income from those who truly build lasting generational wealth. Listen, it isn't about some hidden trick, a secret stock tip, or a lucky gamble. It's actually about a profound shift in how we perceive and utilize the universe's most finite resource, time.
So, how exactly do millionaires use time to multiply money? It's a massive question, isn't it? We usually think of time as something we just trade for money. We trade it hour by hour, paycheck by paycheck. But to cross that threshold into true wealth, time has to transform from a simple unit of labor into your most active, relentless partner. Time literally has to become the engine of multiplication. The source material outlines exactly how this transformation happens.
Okay, let's dive into this. The Millionaire time horizon.
Our first major concept from the source is a complete departure from the desire for quick gains and overnight successes. The focus totally shifts to the long game. On one side, we have the short-term focus. This is kind of the impatient average mindset, the desperate desire for immediate returns, the panic when the market drops, the constant anxious checking of your bank balance. It's a psychological state anchored entirely in what is happening today. But on the other side, that's the millionaire time horizon. Here, time isn't a ticking clock running out, it's a broad, expanding canvas. The millionaire mindset doesn't ask, what will this do for me tomorrow? Instead, it asks, what will this multiply into over the course of my entire life? It requires a complete psychological recalibration away from instant gratification, moving toward a deep understanding of what will happen decades from now.
Which brings us to Section 2, multiplying money through compounding. This is the first core pillar identified in our source material, and it is the actual mathematical engine of wealth creation. Look, we hear the word compounding thrown around all the time in the financial world, but isolating what it means in the strict context of building a massive net worth, it changes everything. Compounding is the process by which money and its accumulated growth multiply over time. It's absolutely fascinating when you really break that phrasing down. It isn't just your initial money growing, it is the accumulated growth that is also growing. Your money makes money, and then that new money makes even more money. It becomes this completely self-sustaining cycle, literally like a giant snowball rolling down a really, really long hill, gathering mass continuously. And this brilliantly illustrates what happens when we map that exponential growth mathematically. The trajectory is just staggering. Let's trace these three stages of growth. First, there's your base capital. It's relatively flat, representing just the raw effort and initial cash you put in. Then, in the middle phase, early compounding starts taking effect. There is a slight, almost unnoticeable upward curve. Honestly, it's incredibly easy to get discouraged here because the progress feels agonizingly slow. But that final stage is where the magic of mathematics truly reveals itself. Late stage, multiplied wealth. That explosive, vertical trajectory happens for one simple reason. The capital was left completely alone to do its job. The most dramatic leaps in net worth almost always happen in the final decades of a lifelong strategy, simply because the base being multiplied has grown so immensely large.
Next up, patience as a strategy.
To actually reach that explosive growth, we have to rely on the second pillar, patience. And I'm not talking about patience as just some passive virtue. In the mechanics of wealth, it is a highly active, fiercely calculated financial tool. It is the absolute iron discipline of not interrupting the compounding process. Walking chronologically across this timeline makes the abstract feeling of waiting a decade perfectly tangible. Year 1 is simply planting. You put your money to work, and honestly, it looks like nothing is happening at all. Year 5 is waiting. You might see a little bump, but the psychological pitfall here is huge. This is when most people get bored or anxious. They literally pull the financial plant up by the roots just to see if it's growing, which effectively kills the compounding cycle. Year 10 is growing. Now the curve starts to bend upward. You are finally seeing the accumulated growth flex its muscles. And then, year 20 is multiplying. This is the payoff. The frustrating discipline of waiting decades suddenly translates into a massive, tangible financial reward. When patience is successfully applied, time becomes a multiplier rather than an obstacle. This is such a profound conceptual shift. If you're impatient, time is your enemy. You're constantly fighting it, trying to rush returns, stressing about every passing day, looking for shortcuts. And those shortcuts usually lead to brutal losses. Fighting time destroys wealth. But when you embrace patience as your primary strategic advantage, you stop fighting the clock. Time stops being a hurdle you have to jump over. Instead, it becomes the current that effortlessly carries and builds your wealth. Let's move to and see how this builds into our final section, the power of long-term thinking. So the crucial point is that this entire architecture relies on exactly 3 foundational pillars. Compounding is the mathematical reality. Patience is the behavioral requirement. But long-term thinking, that is the visionary framework that ties it all together and makes the whole shebang function. You don't need 100 complex, stressful formulas to build lasting wealth. If you want to adopt the Millionaire time horizon, your financial worldview must rest entirely on these 3 distinct supports. Let's look at them together as a unified, practical framework. Here are the actionable steps drawn straight from the source. Step 1. Leverage compounding. You have to actively place your resources in an environment, like broad market index funds or appreciating assets, where they actually have the mathematical ability to multiply. Step 2. Exercise patience. You must deliberately choose not to interrupt the math. That means completely ignoring the noise of daily market fluctuations and staying the course even when the process feels slow and boring. And step 3, commit to long-term thinking. You've got to stop evaluating your financial progress in terms of days or weeks. You absolutely must start evaluating it in terms of decades, perfectly aligning your daily financial decisions with a vision of your future self. The source material distills this entire philosophy down to one profound reality: the power of compounding, patience, and long-term thinking. That is the formula. It's so elegant in its simplicity, but let's be real, it is incredibly demanding to execute in a modern world that is completely obsessed with instant gratification and quick fixes. Yet, history and mathematics show us time and time again that this is exactly how generational wealth is truly multiplied. Which leads us to a necessary moment of reflection. Are you operating on a short-term timeline or a millionaire time horizon? Seriously, take a hard look at your own mindset. Are you constantly fighting time, anxious for tomorrow's returns? Or are you ready to step back, embrace the math, and let the decades do the heavy lifting for you? Wealth isn't built overnight, it's built over time. Thank you so much for joining me for this explainer. I'll leave you to think on that.